Hey guys, what's going on? Coming at you with a Tuesday morning video. I make videos every day at 9 a.m. So if you guys like this content, just make sure you like, subscribe, comment below. So today I want to talk about one of the stocks I actually just exited, and that is Wynn Resorts. Ticker is WYNN. So a lot of the market's been going on in September. There's been a lot of selling off. Historically, it's the worst month of the year as far as return in the market, dating back from like decades ago. So, one thing that I was kind of up in the air with this stock was, really when I started buying the stock, I was buying it at the lows of $60 and like $72. That's where I primarily was buying the stock years ago. This is all long-term gains. Really believed in the company. Really saw, before the crash of COVID and all that stuff, it was at, it's at highs of 180, 200 before that. And then obviously the COVID scare made it all go down. I saw a big opportunity there, bought a good bit of Wynn. It actually, on the March and April lows, it went back down to I think it went to like 95, 100. So it previously, before that, like in the spring, or in the, in the late winter when the market was rallying like crazy, it hit like 120, 130 peaks. So I saw a really good buying opportunity, average cost up from that. So that's really kind of my thought in this, and really the fundamentals didn't change of the company. Everything was reopening and I thought everything was great. So that was kind of my mindset at the time. Well, yesterday I sold at $81.14. So I don't blame myself because the fundamentals weren't changing. Nothing really was going on. We were reopening. Obviously stocks go up and down. So wasn't really too worried about, to be honest. So obviously the fundamentals have changed in the company. There's a lot of uncertainty in China right now. So I really wouldn't get out of the stock because, I could see it going anywhere from like $60 to $120 within like the next 6 months. I think it's going to be a super rocky ride. And to be honest, I just don't feel like risky. I have long-term gains. 90% of my position is a long-term gain. I'd rather go out with a profit, even though it really wasn't how I was planning on it to happen. But that's okay because, that's why you diversify, and, sometimes things don't always go as planned. So, which is okay. I mean, I still made money in long-term gains. I'm only getting taxed 15%, which is great. My cost base was $68.31. So that's what it was actually when I sold out on my whole position. So obviously I was buying at this, but if you factor in all what I had buying there, my cost base still was $68.31. So I still made double-digit gains, all mostly long-term gains, like I said. Why? That's why basically I just told you. Basically, China's cracking down on a bunch of things. They're cracking down on gaming. They're cracking down on like Didi, like ride sharing. They're cracking down on gambling. They're like, you name it. They're just cracking down on everything. So they're kind of just like, they're just trying to control people and get as much money as possible. And, there's a lot of uncertainty in China right now. If you don't know Wynn, Macau is in China, and that's about 50% of its revenue. So when you run the projections of this company, let's just say China shakes down Macau or stops the gambling or restricts it, or, really they can do whatever they want there. Well, that impacts 50% of Wynn's revenue. So when you run your projections and that changes like that, it's really scary. Because if you think it was going to go to this one day, and then 50% of the revenue, just say it's not going to totally go away. Let's just say hypothetically, they lose 25% of sales in Macau. Well, then your projection is going to be totally different than what it was when you thought it was going to grow and it was still 50% and everything was good. So that's kind of where I'm at. It's just it's basically risk reward. To me, I was up, long-term gain, not worth the risk for reward, because I could also see it go down to 60. Well, if I kept holding, well then I'm below my cost base and then I lose money. So that would really irritate me. And I was content. I've been watching the market in this stock, especially for the past couple of days, and I was hoping it would do like a little like a sell-off. That's what it's been doing. And I was hoping you get like a little quick spike and then a massive sell-off, and I never got that. It just kept selling off. So I'm like, you know what? I'm not going to be greedy. I'm going to take my profits. I don't see it getting any better anytime soon. I think it's going to get worse personally. So I took my profits and left. Yesterday, the market had a massive red day. I don't think there was one stock that was positive on my watch list or in my account. So the Dow was down 1.7%, S&P 500 was down 1.69%, NASDAQ was down 2.17%. So that's a very big red day. So my account, I think it might have been the most money I've lost in a single trading day to date. So that's not something to be proud about, but I wish it was the other way around. I think it's the most money I've gained or lost like in a single trading day ever. So unfortunately it went to the downside, but that's okay. I mean, I have cash, as I said in my previous video, I have like 25% cash on the sideline. I did not buy anything yesterday. I just want to see how things shake out. All the large cap companies that I'm in, PayPal, Google, Amazon, like I'm still Facebook, Apple, Facebook, Google, I'm still up 80 to 150% even with a massive correction back. So I still think they're all personally overvalued. So I'm really not too concerned about them. Small caps have been beaten down a lot. I've obviously added a lot to those positions, but they're still above my cost base. So with what's going on in the market and all the uncertainty of when the Fed's gonna taper and China and everything else going, the small infrastructure bill, is that gonna pass or what's gonna go on with that? There's a lot of uncertainty right now. COVID cases, are they gonna start ramping up again? Are they not? There's just a lot going on. I feel like we're not even close to the bottom of this, like, if you wanna call it correction or dip or whatever. So I'm just staying patient. And, after I buy or sell, I'll let you guys know. But yeah, I'm officially 100% out of Wynn. I don't plan on ever re-entering this stock just because 50% of the revenue is from Macau, and I don't like that. So I am totally removed from officially all Chinese stocks currently, just because of what's going on over there. It's just not worth the risk reward to me. Obviously, if you believe they're gonna turn it around or, do great things over there or not, shake people down basically, you could make a lot of money in some of these stocks like DD, EHang, NEO. There's a lot of good ones like the Alibaba. Like the fundamentals of those companies are great. It's just unfortunate that they, you don't know what's gonna happen to them. So it's crazy due to their government. But so that's all I got. So I'm out of Wynn. Don't plan on re-entering. Now, I will say if Wynn does, for whatever, somehow by some miracle, goes to like $45, $50, I would entertain making a small rebuy in. And because I can't say, just with the US side, I feel like that is a steal. So anything on the Macau side, even if it went really bad or south, the risk reward to me at that point is 100% worth it. But if it's floating at like the 60 to 80 range, not really interested in re-entering in personally. So I know some people are averaging costs down. I know some people are holding, but I decided to sell out, and that's really why. And now I got a bunch of cash. Well, now I have even more cash. I probably have close to 30%. It was probably 5% of my portfolio. So I probably have 30% now cash ready to go. So I'll gladly put it in something else. So if you guys like this video, please make sure you like, subscribe, comment below. Till tomorrow, peace.